Welcome back to the weekly portfolio update video, where I showcase my stock market portfolio week in, week out with full transparency. The portfolio currently sits at $10,084 or 14,265 Australian dollars, up $169 from last week. I was up a lot more before the market decided to drop back down, and my portfolio basically fell 4% in a day. But I guess that's just what the stock market has been like in recent times, and you can never count your eggs before they hatch. Looking through my portfolio, stocks like Apple, Alibaba, Costco, Google, JP Morgan, Microsoft, the Nasdaq and S&P all rose, whilst Facebook was the only stock that crashed, but more on that later. I'm not worried about the week-to-week performance of some of these stocks. I'm looking long-term on all of them. But I do think once the market bounces back up again, I'll be able to sort through them and sort through some of my positions and move my capital into some stocks I feel a lot more confident on, and that is something I will work on in the coming weeks. Another quick thing I wanted to speak on before I got into the business news was dividends. I've never been a dividend investor. I've diversified into stocks that offer dividends, but it's never been my way of investing. But as I add more money to this portfolio, and it grows, the dividends increase, and that has been such a morale booster and a great way of seeing the snowball effect that investing has. The longer this portfolio has been open, the more and more my dividend payments have grown, and will continue to grow. And although my strategy is to invest for the long term on growth companies and stable companies, it's nice to see that free money coming in from holding companies I already believed in. Now, in terms of business news, shares of Facebook's parent company, Meta, closed down more than 26% on Thursday after the company's forecasted weaker than expected revenue growth in the next quarter. It's also said it's taking a big hit from Apple's privacy changes and showed the first quarterly decline in daily active users on record. The stock finished with its biggest one-day drop ever, ahead of the 19% plummet it saw in July 2018. Thursday's drop shaved more than $230 billion from its market cap, bringing it to about $660 billion. The company, which released its earnings under a new name for the first time with a new reporting structure, missed earning estimates for the fourth quarter at $3.67 versus $3.84. Analysts were expecting, but it beat on revenue for the quarter at $33.6 billion versus $33.4 billion estimated. Still, its revenue forecast of $27 billion to $29 billion for the first quarter fell below analyst expectations of $30.15 billion. The company said Apple's iPhone privacy changes, which impacted its ad targeting and measuring, would result in a $10 billion revenue hit this year. It also said macroeconomic challenges like inflation and supply chain disruption are weighing on the advertisers' budgets. Facebook is also leaning more heavily into products that generate less revenue in the short term, but that executives believe have large growth potential. Like Reels on Instagram, the company's core social media business, reported under its family of apps, made $32.79 billion in revenue in the quarter, with operating income of $15.89 billion. Meta broke out of its Reality Labs segment for the first time, comprising its future-focused business that aims to develop the metaverse. The segment made $877 million in revenue in the fourth quarter, with an operating loss of $3.3 billion. The segment lost $10 billion last year, and those losses are growing as it bets on the metaverse. Other social media stocks were down Thursday following Facebook's plunge. Shares of Snap were down 23% Thursday prior to its earnings report after the bell. Pinterest shares lost more than 10%, and Twitter shares were off more than 5%. Facebook is a stock I own, and I've been a bit iffy on in the past. Out of all my tech stocks I own, it's my least favorite. But with the stock falling this low, there's no point in selling. If anything, probably not the worst buying opportunity. But I think I will hold off and keep putting my money elsewhere that already has shares of Facebook, like the S&P and the Nasdaq. In more tech news, Google will be implementing a 20-to-1 stock split. Alphabet this week announced that its board approved of a 20-to-1 stock split, meaning that the shares of Google's parent company will be soon trading at a much cheaper price. The news, which arrived at a massive earnings report where the company's revenue growth of 32% helped send the stock 7.5% up during Wednesday's trading. The company's value had more than doubled since May 2020 and is now worth just shy of $2 trillion. It's the latest stock split in Silicon Valley, following Apple and Tesla, which in recent years both split their stock as their valuations skyrocketed. Here's what you need to know about the stock split and how Alphabet's move will impact investors. At nearly $3,000 per share, Alphabet is one of the priciest stocks in Silicon Valley. The company's chief financial officer, Ruth Porat, indicated that the move will allow more people to invest in the company. Said, "The reason for the stock split is to make our shares more accessible. We thought it made sense to do," in a conference call. Analysts have also speculated that the move could get Alphabet stock into the Dow Jones Industrial Average, which is not currently a part of due to its high price. Entry into the index could help increase the stock's value, as it would require all funds that own the Dow to buy Alphabet shares. Though the new price will be roughly $150 per share, as of Alphabet's Wednesday closing price of $2,960, existing shareholders will receive 19 additional shares to every share they already own. This means that an investor who owned 100 shares will now earn 2,000, but the total value of their holding will remain the same. Overall, as a Google investor, I think this is a great move for the stock. It will allow more investors to buy in, and such will hopefully raise more capital for the business to continue its amazing growth. Overall, this was a better week for the portfolio, going back over the $10,000 mark, and the week was looking promising up until the final day, where stocks fell back down. Facebook stock crashed over 20%, and Google implemented a 20-to-1 stock split, and those were some of the biggest investment news. Our stocks went up and down. Tune in every week for a full transparent look into my portfolio through the ups and downs of the market. And subscribe to Business Ventures and leave your thoughts in the comments.